Do you want the good news or do you want the news the Fed actually said next? Yes, am I here to confuse you? I'm absolutely looking at all the numbers out there, all the indices, and it is a complete S show. But there's a lot of good going on in the real estate market. We're going to go over what the Fed had said and what they've done today, all next on Real Estate Daily. Welcome, everyone. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage market. Now, before we jump into it, do me a favor, hit that like button. I'm going to give you the best 5 to 10 minutes in real estate on a daily basis. Let's jump right into it. I know everyone's like, Troy, what did the Fed say? Well, let's go over what the Fed said right here. They came out. Fed Chairman Powell said, hey, we're not raising rates, we're not lowering, we're going to keep them there. So with that being said, he had a speech afterwards, and this is what he talked about. It says, summary of Fed Chairman Powell's Q&A says there's no proposal to cut rates at this meeting, okay? So no one even talked about cutting rates at this meeting. I would not say we have achieved a soft landing yet. I don't think there's any question we're not going to have a soft landing, but just like he did in 2020 when he didn't cut rate, or 2021 when he didn't raise rates, he was late to the party. He's going to be late to the party here as well. We all know it. Okay, we don't need their 400 PhDs to tell us that they've never ran a business ever before. How many Fed chairmen ran a business? None of them have run a business. Kind of funny that they're the ones running and trying to deal with the entire economy when they haven't even run a business and dealt with it. But I digress. It says, don't think it's likely that rate cuts start in March. How would you know? I mean, you're already, we're going to have 2 sets of numbers come out prior to that, but you're already saying that. And you're saying it because, you know, and obviously because we saw a bump in the CPI, but we know the CPI is a lie, right? We all know it, right? Because the federal government keeps spending almost $1 trillion a quarter to keep the CPI number, to keep the CPI number in check, right? And they keep the economy humming. If the GDP wasn't so good, it would be a complete recession and he would have to cut it. But the federal government keeps spending $1 trillion a month. I think this quarter they project $800 billion plus $850 billion or something like that, just to keep things rolling. And that's all debt, guys, all debt. On your credit card, unlimited balance, that's all debt. It says, well, it'll take a couple of years for wages to normalize. Guys, what do you mean? We're seeing job cuts like crazy. And when you do strike or you do demand a higher wage, guess what happens to you? Thank you, FedEx. You got layoffs like crazy. And who's coming next? The Auto Workers Union. Yes, sir. You're probably going to be subsidized by the government to stay employed until the election because they want your vote. It's very, very obvious. And the second that the UAW starts having to cut, the unions or the auto manufacturers start cutting jobs, it's going to be a mess. And they're going to start pointing fingers at the rug pull that just happened. Fight against inflation still has a ways to go. Looking for inflation to settle out at 2% over time. Guys, it ain't going to happen. We've all said it. Unless you continue to manipulate the numbers, 2% is not a goal. It should never have been a goal. The only reason, again, we have to spend so much money. We have to produce money out of thin air to even get close to this. And now with all the turmoil in the Middle East and all what we're seeing, oil prices, the crude keeps going up. We're seeing that all the ships have to then circumvent the Suez Canal and everything else around it. So that means it's a longer time to get our goods. And then right here at the port of Long Beach, like I've told many, many people over and over, they're on strike. And they've been on strike for years. And there's no end in sight because there are tankers, there are huge ships out there full of things on them that they cannot get offloaded in time. And it seems like we're looking at about 25% of that Long Beach port actually working. No one can tell me why they're on strike. Nobody can tell me. All I keep hearing is it's coming from the White House. It's coming from the federal government. That's all I keep hearing. Why haven't we figured this out so we can bring goods in the United States quicker, put them on the shelves, and make them more competitive so they go down. We're just not doing it. It doesn't make any sense. All right, guys, let's jump into the next one. This is also from the Kobesi letter. This is on X. If you get a follow, go on X, man. I showed you a couple of days ago that X is now, or Twitter is now, the second largest news media app on the Apple network. With that being said, I don't even know it's considered as more of a social network, but that just tells you the power over all other medias, including CNBC, CNN, MSNBC, all of those. The majority of news information is here. I mean, even if you look here, I mean, it says White House cyber official exposes what they can't say publicly. There's 15,000 people. Let me show you this. 15,000 people listening to Mario Nawfal right now. Now, is there 15,000 people listening to CNN? I doubt it. It's very doubtful. And of course, most of them feel that the news is FUD. It's not even real. All right, so it just says, in just 5 minutes, the S&P 500 fell over 50 points, erasing nearly $500 billion in market cap. This is what after Fed Chairman Powell had done. Because after what seems the likely victory speech in December, the Fed, let me go continue. The Fed is backtracking. 6 interest rates cut for 2024 seems to be too far optimistic, and we saw, here is the plunge, the S&P 70 points. Yeah, splat. Is this the beginning, guys? Are we going to continue to see inflows into the stock market? Well, how does that affect the housing market? Very interesting. Well, let's kind of do a little bit of a deep dive here. Okay, fastest rising home prices in 2022 by city. Guys, look at these numbers. The top 10 are all double digits. Okay, we have North Carolina, Georgia, New York, Syracuse, Connecticut, Tennessee, several Connecticut, New Jersey, several Jersey, Texas. Guys, we're seeing double digits. We even saw yesterday San Diego went up 8%, and San Diego's the epicenter of real estate. Everything starts and stops there. The foreclosure market began there in 2010, and then it reverberates through the country. And that's where the epicenter is, here in Southern California. We're seeing it. Guys, there's no question about this. We are in a very bullish real estate market for 2024. I told you last year it was. I told you how the rates are going to happen. Let's go jump into the rates, guys. All right. Well, what did we see yesterday? So yesterday's rates, conforming, like I said yesterday, let's go under 6.6. We went down a little over 4 basis points to 6.599. FHA went down another 3 basis points to 6.37. But guys, after the Fed came out, you would think that since they're not lowering rates, okay, that the 10-year bond would have stayed steady or even bumped up. But I told you, if you just look at the charts and chart it exactly the way it is, that it would drop to about 3.87. It would hit its head on the 200-day moving average, which is about 4.10. It went past it, and then it just would go down, and it would climb down pretty quickly. I said that. So yesterday it was 4.038. So we were over 4% interest rates. Guys, where are we at today? Holy shnikes. Did we just dump on the 10-year? 3.91. Guys, rates are going to fall, and they're going to fall fast. And that's where I said, I didn't expect this fast. I said yesterday, I'd be happy if it went under 4. This is pushing under 3.9. So that jump, about 15 basis points, or over 15 basis points, or 15.15, I should say. It is a huge jump, and the charts show we have a ways to go down. And if that's a fact, we are going to see buyers come in on this market. And we're going to see this number. I've said it once. I'll say it 100 times. If FHA and conforming, if they drop below 5.5, we're going to see the sellers come in, and then we're going to see a market that's going to get overheated. Home prices are going up, and we're going to see a boom year in real estate. That's if That's if we can maintain jobs, because we all know right now that a lot of companies are laying off a huge amount of their workforce. Now, on the foreclosure front, when people ask me about it, I say, well, in 2020 on the beer flu, what happened? Well, people couldn't make their payments, but so we were able to have what's called a forbearance, or we were having a stall in our payments. We went a year and a half without making a payment, and then we just jumped in and threw it at the very end of your 30-year term or whatever your term was, which means that whatever payment you're making today in 30 years from now, just inflation will just inflate it to almost zero or nothing, right? It'll just be like nothing. It'll almost be nothing. So if we go into a foreclosure market in a election year, we are not going to see people foreclosed on. Let me be the first to tell you that. We're going to see forbearances given out left and right, and I don't think we're going to see a foreclosure market, a traditional foreclosure market ever again. I think the government's coming in and they're going to save everyone's ASS. On top of if they do have to foreclose, they're going to sell this off to Blackstone or to a hedge fund where they're going to make you a renter. You got it, guys. That is my insight of what I think might happen if we see a big foreclosure market again. Otherwise, I don't really see it, because I think there's too many people on the sidelines that have solid jobs that want to get into this market and want to be a homeowner. It really does separate the middle class, whether you own a house or you don't own a house. Well, guys, thank you very much for joining me today. I really appreciate it. If you guys have any comments, please leave them below. Otherwise, I will see you tomorrow. There's a lot more happening on Every Day in Real Estate.